Welcome back, yo. We're back at it, and I just realized that from the previous video that I recorded, there was no um audio, and I apologize for that. I just noticed later on, so we're just going to look at what happened during FOMC. So we'll break it down again. We've got our support here, our flow, right? This is our flow, and we've got just gonna use arrows as indicators. I'm thinking maybe might as well analyze what's I'm expecting for the upcoming week. Um, but I can't. I'll have to see how this previous week kind of closes. So, but as you can see, I'm actually in overall. I'm now expecting the upside push, but okay, um, got this resistance zone here. We're gonna put our horizontal line. Okay, we are going to adjust. We're going to be adjust our zones. Oops. Right, and then the resistance right here. Okay, so let's note what this is. So this is our weekly support, and this is our weekly resistance stance, right? This is our weekly resistance. Now we are on daily, and we want to break it down even furthermore to see what exactly to expect, or actually what happened, right? So as you can see here in the zone here, it pushed up because, as you can see, the previous candle has no wick. Um, the bearish candle has no wick, and the bullish candle has no wick, and this is an indication of no momentum to push to the downside, right? So there were more buyers in the market, so it couldn't push down. So within this zone, we came within the zone, there is actually a demand zone. There is a demand zone right here. Um, and as you can see, when we pushed down here, when we rejected right here, right? We rejected, and we saw confirmation of sales once this candle of the 21st broke the previous low of the 20th, and it was an indication for going down. Um, so for me, I know people would think of it as okay, yes, we've got a support here, right? There is this young support, resistance, and we're expecting a support to come down and retest, right? The breakdown to come and retest the support was this here, and this demand zone was that confirmation of when it has retested the support zone. So this breakout here pushed down, but the following day candle pushed up and broke the previous candle's high, right? And then it continued down, which was a fake out, clear indication of a fake out. And after it pushed back down, it came back down here. So I never took those sales, but it would have been really good sales if you used your support zones and your, well, mostly your demand zone, your demand supply zones, right? So now we still want to see what happened after we pushed down. We pushed down and we came down here, right, to create a support without to create a support, right, as you can see. So this here pushed up, we pushed up from here, right, we pushed up from here, and we went all the way up, and then we rejected up here. This rejection is the one with the fake out. Well, the fake out is this one here. All right, so this happened, and when we came back down here, we created, there was a candle. This candle had no bottom wick, so there is no indicating that there is no momentum to the downside. I'm just gonna put this here, no wick, therefore no momentum to the downside, therefore no momentum to the downside, right? So we pushed up, right? The moment we pushed up, we had this rejection here. There was this rejection here, so we were gonna expect some sort of push downs, right? So to see better what exactly we wanted to get, we'll take it down to the one time 1 hour time frame. See the zone here, it's just messy. If you look to the left hand side, right, here we are, no wick, and we're pushing up and it's messy. So this range here is a no trade, was a no trade zone, right? No trade zone. But if we look closer, right, if we look closer, yes, it's a no trade zone. But what happened is we broke out. So this push here, we broke out, we broke out from this resistance level here, this trade, no trade zone. And the moment we broke out, we came back to retest, right? We came back to retest and then we broke out again. So now we have this push one, right? Two, and then we came to create this, right? So we broke up, came to retest, pushed up, and then this came back to retest the support we had created. So I prefer the 13-minute because it was much clearer of what was actually going on, right? So we have got this resistance, we break out, we come back, and we retest the support, or we create a support, right? We break out, create a support, we push up, we come and we retest the support. So create support, right here, we created support right here. Looks better this way. Created support here, and then we came back to retest the support. Retest support. All right. Remember, another thing to look at, um, how did I know that it was going to come down? The 1 hour, right? We broke out, created support, we pushed up, it closed with upside down hammer or whatever you want to call it. And this next 30-minute candle engulfed the previous 30-minute candle, indicating the downside push, right? So to know that it was coming to retest this support zone, I looked at the 30 of what was actually going on. And on the 30-minute time frame, we have this wick fill, all right? One, this wick fill. Two, this demand zone. Three, this demand zone right here. This demand zone, right? This demand zone came to retest support, right? And this here is the 30-minute demand, right? We touched this 30-minute demand and we pushed up, all right? So entries could have been taken on the 15-minute. Nowhere, right? They couldn't have been taken anyway because there was no confirmation whatsoever of what's going on. The only place that we could have taken entries was over here. No, wrong thingy. Over here. This the breakout of this here. The breakout out of here. Because right, so we created support, we pushed up, we pushed down to retest the support. So this rejection point, right, this rejection point is our confirmation or our entry point. So entry point, breakout is the entry point. Ooh, entry point, right? So this right here, this breakout here was our entry point. So to enter this on the 30-minute, you'd have to put a buy stop, and it would have been your entry right here above this previous candle, right? Because obviously on 15-minute we'd want a break above the previous candle's high. If we were trading it on the 30-minute, your entry would have been much later because you would then enter here. So we wanted an entry point above the previous candle's high, previous candle 15-minute high, which is here. No, I'm lying. Yes. Right, so this previous candle is high. I'm right actually. Right. So we break out the moment, right? So what actually happened is, to explain better, and your stop loss is below that previous 15-minute candle for little risks but better rewards. So what really happened is we needed this candle here, the 1545 candle, to wick down first. So the moment it wicked down, right, and then it broke the previous candle's high, that was our entry point, right? And you would have to place pretty much your stop loss below the previous candles, right? So this was your stop loss, pretty huge, but not really because it's from 15-minute and it is for higher gains, right? So whatever happens now from this entry point doesn't matter, right? Because now we're going to look at it on the 1 hour. What was happening on our left hand side? Ooh, right. So on our left hand side, we had this resistance that we were expecting here. Well, there was this resistance, right, which we would have came head on head if the momentum wasn't so much, right? So we had this resistance here, right? So already, as you can see on your left hand side, you've got clear candles. So we could have said, okay, we're going to fill this wick here. We coming for the wick fill on 1 hour, right? We're coming for the wick fill on 1 hour, right? And then we look on the 30-minute, what was actually happening on the left hand side. Look at that. We've got resistance here. As you can see, it actually rejected. So that's what was actually happening over here. So we had this move here, clean move, right? A clean move right here from our entry point all the way up to here, which is about 245 pips. Am I right? Am I right? Am I right? Yeah, so, right? And great move up. So this point here, hey, this point here was our take profit. Okay, I'm just gonna write TP1, right? Reason why it's TP1 is because we're looking on, trading long term and interest rates are gonna come out pretty high. So this is on 30-minute. So the moment we broke above this rejection point, right? As you can see again, no bottom wick, right? So no momentum to the downside. We broke above this previous week's, this previous candle's wick. Another entry point, right? Another entry point, and stop loss below that wick. And we're now looking at the wick fill. So what I'm actually doing is scaling in. It's a breakdown of a scaling in, right? As you can see, so 15-minute, you want the break of the previous candle, stop loss below that candle, and we are scaling in to see. And as you can see, clean candles all the way up. So great move up, right? Now, uh, now we go back and we look at the 1 hour, right? We're expecting high news. Remember, we're expecting high news, right? So now we know if we break above this zone here, break and close, or whatever you want to think of it, the break and close above 22 322 280, right, is a push up because again we've got clean candles all the way to the left on that 1 hour, and this was a wick fill, right? Wick fill as well. This again is our TP2, right? Look at the 30-minute. Let's see what actually happened, right? Yeah, it broke above, but now we want to see exactly what happened like on the 15-minute time frame. If we could have actually gotten entries above that zone. I mean, depending on skill, I would have taken an entry right here. The moment I saw this candle breaking above this candle's previous high, so the break above this candle's previous high, another buy entry. With the stop loss below, below the same candle that I used to break the previous high. And there it goes to fill my wick. Let's look at it on the left hand side. Look at it. Clean candle movement all the way up to 23,000. As you can see, that was the wick fill on 1 hour. And you're going to TP right there. And that's it. And that was the FOMC movement. FOMC TP3, right here. So why would I do this? I would scale in, where I start with a 0.05 lot size, and I see that my trade is actually playing out, and I break this previous high. I enter another 0.05 trade and another 0.05 trade, and there I have a 15 lot size trade with some sort of risk management, because I like to think of it this way: the profit I have from here to here can sustain this stop loss, and I can then bring my stop loss of this first entry right there, and I break even, right? And I mean, if y'all have seen Roger, right? Um, Amazing trader. Actually learned a lot from him. Um, he uses magic keys, and with magic keys, you can actually use those to close half and so forth of your trades, etc. Right. So that's what happened with FOMC. Mm, what is today's date? So this still happened yesterday. Okay, let's see what happened. Let's check the 1 hour of how it actually looked on the left hand side. Okay. Um, this broke out, filled that wick. Now we've got this move here. Okay, so we wanted to break out of this rejection with straight clean candles, all the way up to here. Okay, it's pretty cool. All right, so clean candles to the left above here, above 23,100. All right, okay, so let's see what happened. I mean, it's simple. You can see it right here. Breakout. We break out. Um, push it down to retest or will create support right here. We push out. We push down. Retest support with some sort of rejection. And we push out. So if you wanted to get entries on this move up here, what we would be looking for is the break out of this resistance here. Looking at it on 30-minute, great. So the break out of here is where you have your buy stop, because I mean already you can see that there's a lot of momentum coming in here that push solid candles, and there is this solid candle pushing up with no rejections. And I mean, if you're a patterns person, right, from the moment we have this candle here, this bearish candle being engulfed, right, we've got one, two, three, the three soldiers, and of course, three soldiers indicate what? A bullish movement. That's on 15-minute. 30-minute, you got one, two candle, and a bullish candle coming in strong, bust up above here, and it's a little move, but some great pips. I'm sure of about 200 pips. So stop loss here, all the way up here, right? For week fill, previous candle. Let's see on the left hand side how it looked. Yeah, all the way up. And that's 375 pips. So overall, this was all yesterday, right? All yesterday, because I mean, this is over 1,000 pips. 800 pip movement from the first entry. We are trading it on 1 hour. On 30-minute, it was a 200 300 pip. Second entry, 500, that's already 700 800 pips. Third entry, 1,400 pips. And now you're just looking to see, to go hard and see if anything happens whilst pushing it, and you get another 300 400 pips. So you had a total of about 1,800 pips to 200 pips, you know, and that's a whole lot of money made. Like a whole lot of money made. So yeah, to be honest, Bitcoin is one of my favorites. Very easy to trade, easy to analyze. Doesn't need a lot of pattern trend lines. I mean, you can use trend lines. Trend line is right here. Trend line channel to indicate the push to the upside. You know. Um, so yeah, I mean, as you can see, this push here, support, 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 um, resistance, 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 breakout, come back and retest, create some sort of support right here. As you can see, take this out, support right here, and we push up. So we had a resistance here, we push out, right? We push out, we fall back in, so it's a fake out, and then we push back out, right? Then we come back in to retest it to gain momentum, and we pushed out. So yeah, I mean, it really all depends, but usually Bitcoin very easy, support and resistance, simple way to trade it, you know. um yeah, so I will upload another video of what I expect for the coming week. I mean, we can look at it right away, just easy simple analysis, but I don't want to make this video too long, but quick jot down. We're now at a rejection point right there. This is the daily, right? Look at it at the 4 hour. Right? Clean candles to the left until 28K. Right? This is our 4 hour. Looking good. In the 1 hour. Still pretty clean, but we've got some challenges on our left hand side where we have or might get a point of consolidation, but as you can see, um, there's actually a supply over there, so it could be a better push. She's a maniac, maniac on the moon. All right, right, so we can actually maybe see something like this, a push up here, have that rejection, maybe have that rejection, come back here, and then we'll probably consolidate, and then maybe a push back up, otherwise, yeah, Bitcoin is looking good, eh? It's looking good for those who like trend lines. There you go. But I mean, guys, be careful of these, like if you just gotta be careful. Just don't see me drawing like uptrend lines, because look at that. This can actually come back down here, so be careful. It may also just be a matter of it does go up here, but we can't dictate where or how the market will move. So yeah, that's this coming week's analysis on Bitcoin. So yeah, be careful, be careful. Be careful. And if you are using trend lines and patterns, please do not confuse them, because that can become very problematic. So yeah, see you soon, guys. Take care. Take care.